Trading Academy live with Ambrose. Yes, I would say sorry for starting a bit late. At times the internet can also misbehave, but I'll tell you that the market has also opened globally on a misdirection. And don't forget that the market oscillation of what people are seeing in recent days is what I call a news-based sentiment that have pushed the market up and down. And for you to be a successful trader, you must understand how to use tools that matters in this kind of oscillating or a volatile market as we are experiencing. That means whether you are trading in Asia market, you are trading in Europe or in US or even in Africa market, down to NGX, you must understand which tools are the thing you should pay attention to, and also understanding what is happening in the environment we are. That is why you must not ignore what we call economic event or macroeconomic data or indices, anything you call it. These are things that will guide you to make what inform investment decision. That means you must pay attention to what is happening in that domain where you are as you use your chart or use your technical tools to read the sentiment or the psychology of people playing that market. That is where you can make what inform investment. You're looking at what your fundamental, like I always said that for you to also be a successful investor, you must know how to combine your fundamentals. And not fundamentals, they come with both economy and what and the companies, and also the technicals that tell you actual behavior or attitude of those in the market that will help you to make what inform investment decision. And that is why anytime, any day, you don't play what with technical analysis. I tell you whether you are trading stock, you are trading bond, you are trading FS or cryptocurrency, all you are doing, you must pay attention to what is happening. That is why the psychology of traders of that market is very, very important. It started from Asia market. I say that Asia market, as we speak, is missed on this hour with Hong Kong market or and the South Korea climbing on the back of the gains we saw on the tech companies that we saw in the world on Wall Street also was also the weakness experience in that market, this two market. And at the same time, as soon also that because of the figure that also emanating from Japan, we saw that Japan was on the southward movement as at this hour, even when their yen is becoming stronger, because of all this happening in terms of trade war. But the good thing is that I'll tell you that there's a positive news in terms of outcome of US and China trade war discussion, or trade talk discussion, we call it. At that time, there was kind of this optimism that yes, the fear of global recession and also negative sentiment, all that are pushed funds away from equity to save everyone instrument like gold, all of them. I see that there's a kind of a pre-touch now coming up because there's a point that yes, at the end of the day, we'll see a better the deal between the two big economy, US and China. These are the things that appear to hold that as fear, the investors are now becoming focused on what they can do, even as within this between now and July or August for the 90 days to see come at the end of the day. But these are the things that investors are looking at. But like I mentioned earlier, that South Korea saw about 1% jump, 1.5% jump in their market. As also the rally continued even after the trade was using as a kind of hot losses in the previous session. Good news for that. And like I said, that Asia markets saw a sharp gain on Tuesday, but this hour we're seeing a mixed market, which I mentioned earlier. As a lot of what we're seeing that yes, the escalation of the trade war, all is a good thing for the economy, not only in China or US, but across the globe. Only that what every other economy should also learn from this, that even as some partners of US before now are having issue, the US is not making another move to have another trade partners in all dimension, in a kind of war ammunition in terms of technology. You can see that they have moved toward to Saudi Arabia. These are the things that moving to the Middle East. They say that Trump know what he's doing to me that he have more market. Even as people are speculating that Trump will want crude oil price to remain between 40 and 50 so that the economy can run. These are things that we need to put in place. But I believe that both matured economy and the developing economy, or kind of anyway you call it, all of them should learn from what is happening, also to look inward and make policies that also will strengthen their economy. Like I said, that the sharp drop also in Japan market was even when yen was strengthening at the midst of what the rate hike expectation. Don't forget that anywhere in the world where rate hike is expected, it give a way forward for people to drop their stock and go for where we have less risk. And that's why we are seeing, the Japan stock is weaknessing on this hour and in their domain. And we are seeing that, expectation of rate hike by Bank of Japan have put their stock, as to speak, Japan index or called Nikkei 25 is also down by 0.8 as to speak, and that tells you that you can see even the border country, they also is having also another pullback again. But I believe that as more data come, it will give investors more information on what to do in that domain. But I believe that China on its own, you can see that being the largest economy there, is also struggling, trying to figure out that this trade war where they go. But good thing is that as China, central bank people Bank of China have also got trade before now. I believe that they are trying to also push their economy up. Even when some data that came from China were not really expected in terms of try to see the reflection of tariff on their economic activities. But I believe that going to the future, that will also be with this agreement we are seeing pointing to what has happened between the US and UK. We expect that the same thing will happen. But like I said, that move that Trump is making to have another more partners in trade, so that they understand what the game is playing with the world in terms of trade tariff, so that every other domain or economy just different countries also think inward and see what they can do for the economy. Yeah, looking at Europe market. Europe market today is also on a mistrend, looking lower because we are seeing most of the index there are in red. But as a result of what, not only that there's a trade this trade optimism that we are seeing fading fear for economic recession, for global recession, but still because of some corporate action or news in that domain has also changed the market. Most of the market in that region are missed as speak. Knowing that one of the big luxury company there has just informed the market of change in structure, and this is which is likely to lead to job cut, trying to survive or have a turnaround. That also have sent a kind of negative sentiment in that. But even when that stock also again, but market there is still missed. And also don't forget that also, like I said earlier, Bank of England has really cut rate, but see, we are seeing that the economy is still looking for direction in that zone. Apart from Germany that we have seen is the biggest economy there, we are also seeing that other economies are still trying to find direction at this hour. Back to US market. US market, I would say that this is a flat market for US at this hour. Even when market rebounded yesterday after the discussion or kind of a speech from Trump in a you know in Saudi Arabia, but we also saw that the inflation data that came was also softer than expected, which also good. We saw the market breaking out yesterday because of inflation figure. But now we're seeing that today, that the market is already on the flat mode. Say that market is waiting for another trigger. As when I said at the beginning of this class that we are seeing this volatility as well, news-based sentiment at the driving. Yes, we can see some earnings that come in, but I tell you, the up and down, we're seeing, call it yo-yo movement, is about what one information reaction. But for you to stay ahead of this market or to remain in profit, also to protect your capital, you must understand the tools you want to use to trade this kind of market that is up and down, and that is what we are going to discuss today in our class. Like I said, that even with fear of that the low tariff for some goods that are not too common in the US, or that some goods that the regards yes that come from US, that those might have as low as 30%. And if that happens, what's going to be the impact on the economy? That's why this fear of recession and all. That's why the Fed and his team are still waiting to see more. But after saying that this, they want to wait to see between now and that end of end of July or August, to see how this their economy we're looking at. Because yet, even though the inflation figure was done around the 2.3%, I believe that it's in line with most of the forecasts from those analysts there. But I'll tell you, the Fed and his team are really sitting on the world really the next direction with all this, knowing that the moment from now, I'm talking about debt ceiling and all those debt service burden on the economy and all this one. I believe that there are a lot of challenges for the managers there in that environment. But I believe that investors should not panic, even though you are there or here. All you understand that you have to pay attention to the tools that you use to stay ahead of the market by studying these fundamentals and all these market that are just being released, to the market. Once you understand the fundamental less or analysis of any market or any instrument you are trading, then using your technical analysis to catch the move, to see where fund is entering, what is the mood of people in the market, that sentiment will help you to move on, to know where to stay and where not to stay, and also where to move and where not to move. Once you know all these things, you always navigate the market wherever no direction is going. Apart from what the market is having a sideways movement where you're going to be go, but when market is going up and down, with your tools you have available to you and that you understand and you are used to, like I said, with that you can see as many people that use different tools or put many, but it's the one that work for you, that you have studied, and that's the of this class, the one you understand. You can, even though it's as simple as moving average, you know how to do it perfectly. When to go, it's what will give you signal. Once you're able to do that, you are good to go. Come back to what to NGS as we speak. African market as we speak also remain mixed. I hope I'll tell you, but I tell you that fund are coming back gradually to African market because of what this move that before there's fear of rural extension, why many foreign investors are crying off their fund, but with this last move by US and China, and we're seeing also Trump moving to Saudi Arabia. All these are found that yes, the globalization were before that the economic meeting of past are likely also to come up again. But I believe that with this move, it's an eye opener. Looking for collision of collision of trade partnership and all those mutual benefit relationship around the transaction, including all this access to US energy, AI infrastructure, like I mentioned earlier, innovation, computer chips, and all this one. Military commerce, these are the things that the Trump is already preaching, and this will change the attention of America and also other neighboring countries. We know that yes, the Trump is in for something at the end of the day. Gradually it might achieve its goal, but I believe, like I said, it in this class, that it is done on other domain to start looking around what to do to survive. They are also to run their economy. That is the only way you can stay ahead of the market. I won't lie, because if you really want the economy to stand, you must look at where you have strength and how to take advantage of that strength. Is very, very important. Once you're able to do that, you are good to go. But that way, investors should also think. As we are seeing changes in the economy, we also pay attention to see also what is happening. Quick one, that come back to NGS. Like I said, NGS is also extending the rebound we saw yesterday at this hour, which also a good news for the market. If you look at this market data now at this hour, I see that index is already reading almost more than 8,800 and 88, 880.20, which is good. Market is up with almost 0.12%. That's about 117.26 basic point, representing 0.12% in the green. For me, it's a good one. And at this hour, and the market breadth is still very strong in terms of positive. I mean, here 21 gainers against the 11 loser at this hour, and that is that investors are taking charge, or traders are really taking position, even when NPC is coming next week, because we are seeing opportunity. That also global the kind of redirection of funds that we're likely to see coming back to Africa, which Nigeria is not going to be left behind in terms of liquidity, knowing that most of our stocks are grossly underpriced, and also our government, kind of assuring the foreign investor of our policies, and also ability for us also to pay up some debt, and also that also is taken now, even when the World Bank also is forecasting that the economy will grow by 3.6. I will tell you that the government reassuring of this ongoing reform to put the economy in the right direction. That also might continue to attract funds, and also CBN being able to stabilize the exchange rate. These are the things we also look at when it comes to what investment. And to speak like the top gainers right now, is Champion Brewing up by 9.1%, followed by Carvaton have been on the green. So the news break out in the market about the ship launching ship with the partnership with the NNPC and others, FTN Cocoa, that communication, and industrial and medical gas. These are the top, and also we're seeing the police microfinance also up there by almost 6.4%. On the loser side, we're seeing Multiverse. Don't forget yesterday it was among the gainers, people are taking profit. Nimed, Fidelity, and ICO, and the last one there is Veritas Capital. These are the ones on the board. If you look at the results that they are very, their momentum in terms of loss is very, very small. And that's why the market is again, I'm not surprised. Let's see, market able to break out the last restart level, and that will also push out the market into another direction. Yes, back to our topic today. The tools that are very, very important for trading at this hour, say the technical tools to trade NGX volatility profitably. You must understand those tools, and these tools are many. But the ones I want to mention that if you can pay attention to this one, it's going to guide you to make informed investment decision. Most times, the traders often fall into the trap of believing that until believing that more than having more indicators on your chart or more tools are the thing. No, it's become more complex. Simple thing is that you understand the tools that you have mentioned earlier in this class. Those tools will help you. Technical analysis is wide, but the ones that you understand, once you're able to use it and it becomes part of you, it becomes your strategy. You can use it to make decisions at any given time. That's why you must pay attention to that, those tools, because I believe that the real edge, in trading is that you are focused and you narrow down to what you want in the market. Once you can do that with using those tools I'm going to mention now. These tools are things that are very, I know that they are very, very important. It boosts your confidence if you know how to use them confidently, because I believe that once we're able to share these tools now and you go back and look at them, and I'll say that this will help you also to understand the picture of the market, no matter what you are trading. Once you're able to put this to them, and also the simplicity of these tools also help you all to make use of them effectively. And once you understand it, it becomes what you use because of the clarity it will give you looking at the market. Because not just looking at the market, no. Once you are focused on what you are doing, you come to see, you continue to see opportunity with these tools. One of them is what is price. I say that price is king in any market you are doing. I say technical tools, price is king. And that's why I call it the market voice. Price is the market voice. Why is market voice? Every technical analysis starts with what? Starts with the price. Price is very, very key. And whether you are trading stock future or anything you are trading, it begins with what? With the raw number, the open, high, and low. Close. These are the basics they want to. This language is what every investor wants to understand. He wants to understand the open, high, low, and close. It gives information to you what has happened in the market. This language is what everyone will honestly look at for when you are trading, because understanding what kind of studying price action give you more fundamental understanding of how to buy or what to sell. Because once you're able to understand the price and you're looking at the price action, it gives you more information that you need. And that is why it's very, very important. No matter who you are, these tools are very, very important. I said one, I've mentioned earlier, is price. And I've given you that I said price is the voice of the market. We call it the market's voice, or market for anyone to call it. Because we say price is king. Everything go on involve around the price, you must pay attention to that. Another thing very, very important is time. Some say market time, but me, I'm saying the time here. Time here that you need to understand as a trader, at what comfortable tracking are you looking at. Most time you pay attention to the vertical price movement, up, down. But most time people don't look at the horizontal. To see the time is often ignored. Why? Because all action is a what you trading. Forgetting that the same the horizontal the horizontal axis of your chart is also very, very important and also very, very powerful for people, because you need to know where it's going to turn. I think if you're looking at your price in terms of candlestick, the open price, you need to know where is it turning. And that's why you must be and look at in all these there's always a turning time. If you're looking at this price or you look at where it's going to turn, is that time the time going to turn is very, very important that you should know. That is the time here. Why time is about looking at how when results will come, all those things is also part of time. But the looking at time, this time has to also when you are forecasting, you want to know exactly where the turn, because you are using your chart to look at the past price and also to know where you are going in that direction. As you incorporate this into your discussion or into your charting or into your writing or into your studying of the other, then you understand where there's a shift. It is that shift that you know whether the market is going to pull back or want to start the uptrend. Whether you want to rebound, you need to think about. Once you begin thinking in this direction, that these prices and time work together, you start seeing the market as what? As a three-dimensional system that at the end of the day you remain what? Not only just market moving up or down, so that market also move the other way. That's why it is good to understand time when it comes to investing. And this time is simply called what we call the overlook artists. They overlook artists. You look at the trend, don't forget that you have to look at where exactly where the market is going. Not only looking at the vertical price movement, or market going down. No, you need to know where it's going. This is very another one very important is what I call the momentum. Momentum is what everybody in the market understand. But what about momentum? It tells you, how fast price is moving, and it's a very important thing that you should understand, because even before market turn, you need to understand. That is why that time when I mentioned earlier, well, before market turn, will give you a sign. For example, if you are on a speed and you want to turn into a corner, or you can't just with that speed, you have to slow down before you turn. That means if market is supposed to know, the momentum the market will tell you whether the market want to turn to the right or to the left. You will know, because that momentum is what your eyes are. You must pay attention to momentum. It's very, very important. You must, because even though when the speed is too much, you must always know the certain when to slow down. That slow down will depend on what the market will and what is ahead of you. And that's why you must put it into consideration. You must pay attention to momentum. And momentum also another thing can comment is that market speedometer. Market speedometer, as you have speedometer, but market speedometer is the momentum to tell you what then. You can now use other tools, like MACD, RSI, order to look at what is the momentum behind it, the trend, because we are seeing trend, which is the price action, which is price have formed a direction, but either from 2 to 5 days, like I said earlier in the last class, or for more than 5 days. That will give you a trend to see that even the momentum is strong or weak. One thing is very, very important is volume. Volume is what I want to tell you that as we are looking at momentum, look at volume, as we are looking at price, look at volume. As the moment is going, what is the volume pushing it? That volume is also what I call also fuel. That fuel, that energy also is the volume. If the market is moving or car is moving without fuel, so before you know it, will just the car will stop there. But if market is moving without volume, that market will not. That is why as market is moving, check the volume that even if it's coming down, check the volume that is coming down. Like if a car is moving speed and fuel finish automatically, that is where the car. So that's why it's market going up and fuel finish. When fuel finish, that the volume, you can say it reflects on the volume. Look at all this one. You can see where the market told. You can see that before now, the volume is above the world average. But look at the 2 days that market proved that the volume is also, you can tell that volume started trading. You now see that yes, something before we're not seeing another volume coming yesterday, but they didn't cross the what that's why I said less than average volume yesterday. You can see, but you can see that when the market when the first finish, because the volume very coming down. That's the thing. As market is going on, that's a volume coming down. It's a matter that you have to know that the thing, the fuel, the market is moving with all the trend moving is also fading. Now that's why you must pay attention to what to volume. It's very, very important. Another one is what one called time frame. Time frame. You might be a scalper, you must be a short term that you want to just trade. But good thing that as you are looking at short term, you are looking at also the long term time frame to give you an insight where the market is going. For example, now you are seeing a market here touching the peak of this or what is the peak? This is almost let's take it here, almost nine 9,800 and that is the peak of the market here. 9,800 and 855. You can take it here, put it, you can see it here. 109,822 points. You can see the peak here. That's the market didn't get there, but market get to this level. This is a week for first time coming down. On the market break out here, you need to see when it's coming up now. What is it? You need to know on your long term frame what they now. 1 month is a long term frame to look at. You can see that for the 1 month, you can see where the market is now. That this place remain also the longer, the highest market has gotten. Because that it's almost testing it until you break it out before because this is the month of what the month of May. You can see that the market is already even when April has given us a sign of what a sign of hammer. You can see that March was in red. April tried to resist what decline, close flat almost here. Now you can see that May is already moving up. I know that June is another market that we have to play with. The market June is always a buy market. Why this May is right profit. Why in June come back? Because June is the market, that market to prepare for what? To prepare for the month of July. That's why you can see that you must look at the time frame starting from 1 hour, to as start as well as 15 minutes, 30 minutes, 45 minutes. As I think it's giving the story of the market at that particular time, at that particular time frame. That's why you must pay attention to these tools. So you want to know where the market will turn. For example, now you can see that with this candlestick, you can see the signal here. Even when the market is coming down, you can see that market was up here, down for 2 months, but you saw a signal here, almost similar, but this one is bigger. But this also another hammer here before you now see this uptrend. Here for almost 3 months, market was up before pulling back in the month of March and then flat on the April. Well, as you can see this trend, always pay attention. Look at those of this trend here. What happened there? You can see a hammer here too. You can see that the wick is here. You can see it here before this market rally for how many? But here there is a sign of pullback here. This month went up, came down, but still there is more a rebound. You must pay attention to all these turning sign in the market. That's why I believe to trade breakout also is very very important as a trader. That's why I tell you that many traders are waiting for a breakout here. When there's a breakout here, it's a sign that the market is going to go further high. For another position, set of position, set of people who wants to be coming back to the market. That's why you must understand when to time the market. Like I said, there's going to be timing and time. Time why time is looking at your chart to know when to drop in. The expectation of where either earnings or news or these are the things we do in the market. You don't just invest and go and see. That's why because of our time, I may stop here. No, we don't have time to look at what other stuff that are top there now, but our time is fast spent. I believe that the little we have shared here was for you to rub mind in this platform. This time is short. No, it's almost just only 20 minutes because of this period. I want to just increase it to 30. That's what I'm doing. But normally our time for this program is 20 minutes. But because of things, what I said, that I won't just stop. That's why I have to take it call all these two that you needed and explain it before I round up the class for today. On this note, I'll say see you on Friday. Enjoy the rest of the trading day. Bye.